Good morning and welcome to a Purple Chips web update for August 14th, 2012. I'm John Schwinghammer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Before I start, I would like to point out my disclaimer here. The information contained in this presentation is not intended to be a solicitation to buy or sell securities and is not intended to be investment advice. This information is based on the criteria of the Purple Chips model and has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Investing in the stock market can be risky and viewers should consult a professional before investing in the securities markets. Now, moving on to our update for Priceline.com, which is the subject today. I'd just like to point out the changes based on the announcement that they made last week. On August the 8th, they mentioned that there would be weakness in Europe, which would cause lower earnings going forward, and consequently the stock dropped about 16%. It went from $680 down to about $560 in one day. And I'll just point out exactly what happened here. There we were at $680. They made the announcement. Stock dropped $120, went down to $560. So a 17% drop. Now, let's see, just a moment. Okay, I'm going to switch over to the monthly version of this chart. And so now what you see is the earnings per share line matched up with the last trade here, and you can see you have a very nice progression on the earnings per share. In a situation like this where you have a high growth stock that is influenced by a revised earnings outlook, what I would expect is that on the low end, you're going to see the valuation go down a little bit lower than previous lows. So I would say it would only be safe to expect, the low valuation in this stock should be between 500 and 550, which would be somewhere here. So I'm moving the earnings per share line to show where it would situate if it was at 500 there. And that's also consistent with lows that we saw back in late 2008. You can see the time scale on the bottom here. 2008, 2009, 2010. Going forward, assuming that the earnings continue to progress, even though they would be a bit slower, I would say that $700 would be about the high end and $500 would be about the low end. So that's all for today. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.